Welcome to Bitcoin Now. This is Crypto Rolly, the crypto watch that never stops. Thank y'all for stopping in on a Saturday. It's a beautiful day. It's always a beautiful day. And today I just want to talk about the charts. I want to talk maybe about some trading psychology. It's Saturday. I'm not too worried about the price, so we can have a little more fun. Just talk about just random ass stuff today. I will go through the charts as well. Maybe at the end I'll talk about some of the things that I've been saying on Twitter. It's hard to it's like when you're text messaging your girlfriend and she just doesn't understand anything that you're trying to say. It's a lot easier to say in person. So anyways, that being said, happy Saturday to everybody. This is not financial advice. Do your own research. I am not responsible for your trades. Trade at your own risk. All right. What do we got to say? Oh, yeah, hit that like, comment, subscribe. Thank y'all, anyone who's been supporting the channel thus far. Y'all are awesome, and thank you so much. I am gracious. All right, so Saturday. I don't want to trade on weekends so often because what I've been seeing on weekends, holidays, the volume is really low. And when the volume's really low, it's just really like slow, boring action. It's choppy. You see a lot of wicks. It's just like maybe some bots are playing around. And then all of a sudden a whale steps in, boom, so it's not always the best time to trade, and the thing is, I've heard my favorite YouTubers, because I learned a lot of this stuff from watching YouTube, and so I'm sure that you can learn a lot from watching YouTube channels, whether it's me or many of the other great guys out there. But they're always talking about not trading on the weekend, and some reason I'm just stubborn and I just trade on the weekend. But I find that I end up second guessing myself often on the weekend. I flip long, short, back to long again, end up losing money on fees when I should have just stayed out. Nothing really happened. We end up closing a CME gap the next day. It's a bunch of nonsense. So I'd rather just, let Bitcoin do its thing maybe on the weekend, and then come back when the volume picks up and see what kind of trade is available at that time. Because when it's not moving, it's very difficult to trade. When we have movement, I can even go to a 15-minute hourly chart, and I can identify maybe an ascending triangle and jump in a quick scalp or something if Bitcoin's moving. But when it's not moving, it's just frustrating, and it's a head game, and you're usually wasting your time when you should be enjoying life. Because if you're not enjoying life, what is the point of this anyway? Woo! What a mouthful. All right, so I'm done talking. I'm going to go through the charts real quick, and if things come up on my mind, I'll discuss those at the time. Earlier today, I did tweet that we had this trend line right here. If you want to look at it on top of the wicks, it looked like that, but maybe we should just keep it right here with the candle body closes. So on the 4-hour chart, if we can get a 4-hour close above that, maybe that's a good signal for us. But currently, this is still acting as resistance. I'm not so quick to jump into a short right now because, often the price action on the weekend is not really going with the trend. Like in the bear market, we would have pumps on the weekend and then dump on Monday. So I don't know. Sometimes it's better for let them make their move first. It's like in all sports, defense wins championships, and Bitcoin is a sport in itself, and you have to be playing defense because as soon as this is the thing. When you go into a 10% profit, you're often saying, I'm looking for a higher target. I want 20%. I want 50%. Why am I going to just take this 10% profit? And then it ends up coming down to your break-even spot. And then if you haven't moved your stop to break-even, then it hits your stop. And guess what? If you have a stop there, you're going to lose every single time. Anytime that price hits your stop, it's cutting the trade short and you lose your money right then. But it's not the same in the profit area. So like, you have to start getting used to taking profits, because if you don't, Bitcoin will take them back from you. All right. I'm getting long-winded. All right, let's just go to the weekly. Let's look at all of our indicators. Let me take the drawing tool off. All right, so we'll get a weekly close tomorrow. Right now, our weekly candle is above the 50 EMA, coming in at 78.90. We're trading at 80.68. You have the yellow 21 EMA acting as resistance. We are below that, coming around 81.57. We get our weekly candle closed tomorrow, so it will be interesting to see if we're able to close above all of these, or are we just above the 50, or are we above the 10, or do we get rejected? So we'll see that tomorrow. You know, Bollinger Bands. Yes, we hit our middle Bollinger Band resistance. What else do we have? We can look at our Stokes. Stokes are still up. Yesterday I was pointing out that we had broken this little trend line on the RSI. We're going to just do this real quick. You can see you had this downtrend here. We broke out of it. Could be a good sign for future things to come. Okay, so let's go down to the 3-day here. 3-day, your Stokes are still rising. Nice to see. Let's look at our EMA, MA. And by the way, talking about our EMA and MAs, personally, I use, and this is personally, everyone has their own preference when it comes to moving averages. You know, just you can use the ones that other traders use, or you can use your own, whatever works for you. If you see things lining up and it works, like look, the yellow is this yellow one's important. That's the yellow 21 EMA. So I use the 21 EMA, the 50 EMA, 100 EMA, 200 EMA, 377, the 10 simple moving average, the 200 simple moving average. I do have the 50 and the 100 here in case I want to put them up, but I often just have those hidden. All right, these are the guys that I'm using. So on the 3-day, we are being rejected by the 50 EMA. This orange line coming down is 81.08. We're at 80.63. We won't get another 3-day close for another day or two, I believe, so we can come back to that guy. Let's see, what else do we have? The Bollinger Bands. So yeah, we hit our resistance. We hit our resistance. We are in the bullish territory though, so that's always good to see. Let's go to the 1-day. 1-day, we still have our resistance here in the bullish zone though. Currently, your middle Bollinger Band support coming at 74.73. If price is up here, you'll see this continue to rise. What else do we have? Our moving averages. Okay, so yesterday we closed back above the 200 EMA, but we can't manage to stay above. But this isn't a surprise. This is going to be an area that the bulls and the bears are fighting for, because macro trend wise, if you're above the 200 EMA, you're in a bull rally. If you're below it, you're in a bear market. Okay, that's just a simple way to look at it, and that goes for the daily time frame. If you want to be more macro, you might go to the weekly or the monthly, whatever. The larger the time frame, usually the better as far as the bigger picture. All right, so anyways, we are still above our 100 EMA, which is coming in at 79.55, and we're hanging out in this area. I imagine it's a low volume weekend, so we might just hang out around here unless we get a nasty wick either direction, stop hunt, that kind of stuff that we all love. All right, I looked at that already. Our stochastic, do I see any divergence here? Possibly, slightly, if this is a local high. So this is slightly higher than that one, and then on your RSI is slightly lower. So if this becomes a local high, that will be bearish divergence on the daily. Our Stokes It looked like it wanted to cross, but the price moved up, so it wasn't confirmed, and it poked its head up, and we are now coming into this territory here, but still bullish, no cross down, no reason to panic as far as that goes. Let's see. That's not important to me at this moment. Let's just go down to the 4-hour. I'm on my Coinbase. Okay, nice. So I use the Bitstamp, I use the BitMEX chart, I use the Coinbase chart. To me, they're all the same. It just depends. So if we're looking at the bigger picture, talking about years of data, whatever you want to call it, the Bitstamp is great because it goes back a lot further than the BitMEX or the Coinbase chart. So like when I'm using my moving averages and I'm talking about like extra super macro type stuff, I'm going to use Bitstamp. If I want to see exactly what's happening on BitMEX, because possibly one is trading on BitMEX, I'll use that. Coinbase is just an extra chart for me to have, because if I have a ton of drawing tools on my other ones, I like a clean one. All right. So what was I looking for? The Fibonacci, I think. Let's do the Fibonacci real quick. I've been drawing from here to here just to see on this swing what we're looking at. So from this low to this high, our Fibonacci retracement, we came down to 0.5 and bounced off, and now we're struggling here at the 0.236. We're going to want to see us maybe get back above here so we can go that way. If not, we get rejected. I wouldn't be surprised to come back down to the 0.382 at 78.60 region, and this could end up doing so. Say we came down to there. What we would be looking at possibly would be that, and then maybe something like that. We could draw that, and then you would draw this. So you would have this trend line up, and you came down to the 382. You could bounce off of here, have a bit of a symmetrical triangle, and at that point you'd look for a close above here for more continuation up, or maybe a close below this for more continuation down. Now if we came right here at the 0.5, at that point, are we looking for a descending triangle type formation, which usually is bearish, or we just come down here and then do this guy, descend. All right, you get it. Lots of things could happen. I don't want to speculate too much, but those are possible scenarios. All right. Let's look at the moving averages. So what did we do? Right now, we are bouncing off of the yellow 21 EMA, which is good if you're bullish. And the 10 simple is holding us up. The 10 simple's at 8,074 right now, and we are trading at 8,074 right now. So let's see, the 4 hour is going to close in about an hour and 20 minutes. If you're bullish, you probably want to stay above this. If we close below here, I would imagine the next move would be the 7,800 region, and we're just going level by level. If you notice, I don't focus too much on 10,000, 5,000, 6,000. I'm more worried about what's happening in the next day or two, because that's just my trading strategy. Especially right now, it's been very choppy. We could potentially be forming a bottom. We could be switching from the bear trend to a bull trend. During that time, it's going to be choppy. It's going to be confusing. So at this point, since it's not a really trending market, I want to take profits where I can. If we establish an actual bull rally, I might be looking, to hold on to these trades a little bit longer, use a trailing stop type strategy instead of, just closing every time I go into profit. But as it stands now, I'm not totally convinced that we are in a bull rally yet. Things look nice. They look better than they have in a while, but it's not confirmed. So at this point, I want to take my profits when I can take my profits. Yesterday's video, we were talking about, we were at the 1 hour, and 1 second. So we were at the 1 hour time frame, and I'm trying to see where we were. Okay, I see. All right, let me take the Fibonacci off. 1 second. All right, so I said in the video, if we break this horizontal there, we could have a little pop. All right, it started to look like an ascending triangle. All right, you have a horizontal flat and an uptrend. That's an ascending triangle. These usually break out bullish. You can see we had trouble closing above here. Wicked up, sold down, wicked up, sold down, wicked up, couldn't quite close. This one closed, and boom. All right, but we didn't keep going, and the weekend started. So what I did at that moment was I took 50% profit here, and I had moved my stop loss into break even. Where was my entry? So I didn't get the best entry, but I got it in this region here. All right, I saw we broke out of this falling channel here, and then I was like, all right, fine, I'll take a trade here, maybe move my stop down here or here. All right, and then when I saw that, I took half profit there, and I moved my stop into break even. Then later on in the evening, I saw that the price was coming down. All right, and I saw that the EMA, the 21 EMA, where are we? It was over here. So I think I came home later in the evening. So I had taken profit here. I had a break even stop, and then I came home and I saw we were up here. I saw the 21 EMA was down here, and I was like, you know what? It's likely that we might come down to visit this area. So I took my remaining profit. I closed out, and I'm not really worried about a trade till tomorrow. All right. So that was a lot, but it's good to explain what's going on, because like I said, it's hard to show everything I'm looking at in one chart, and it's hard to really explain yourself in one tweet unless you want to be like Donald Trump and put out 1,000 tweets a day. All right, guys. So on the 4 hour, we're also looking at the Bollinger Bands. We're still in the bullish territory. You have a support at 79.84. Our stochastic is looking for a cross down possibly. So if we break below this middle Bollinger Band, you're going to get a cross that will coincide with that, and you could, like I say, we could get something that looks like this. Yeah, I think that wouldn't surprise me at all. Come down here, bounce around, go that way or that way. But this 4 hour Stoke cross down would tell me that we're going to visit somewhere in this area, possibly. Nothing is guaranteed. All right. So I'm kind of a little bit all over the place today, but I think I still got some good information out there. Let's see if there's anything else I wanted to talk about. Yes. Let's look at the open interest. So price has been rising, and open interest again is kind of falling. It seems like when the price was falling this way, the open interest was slowly growing. It was growing, and then price popped off, and then it fell off. For whatever reason, this is BitMEX open interest. It seems that there's more people interested in shorting than buying. So maybe that's just because we've been in a downtrend and everyone's still stuck in a bearish bias. maybe yeah, I don't know. You can think what you want to think. You can gather your own opinion from that, but I'm just showing you what I'm looking at. What else? So yesterday, oh wow, the real volume picked up quite a bit. So yesterday we were in the billions, and earlier today it fell down to 300 million. Right now it says 740 million. So there's probably a lot, not a lot, but there is a decent amount in this 4-hour candle here. All right. On our 1-hour chart, you have a cross down, and you are beneath the middle Bollinger Band. So, like I say, I think, it's very possible that we go this way. And guys, something I also talked about on Twitter just now is don't FOMO. There's always another trade. And what does that mean exactly? Well, I understand if you're a long-term investor and you don't trade, you're probably looking at this in a different light. But for me, Bitcoin is more of a trader's market right now. Yeah, I would love Bitcoin to go to 100K, a million one day. There's a bit of moon boy in me, and back of my mind, I'm praying for that. But I've been in the space long enough to know that these things take time, and if I'm expecting it to happen, this week or this month, I'm going to end up panicking and FOMOing into a situation I shouldn't. That happened to a lot of people right here. We just went on this parabolic run all the way up to 14K. People were freaking out. They might have missed the boat. I don't have enough Bitcoin. What if we go to 50K and I hardly have enough Bitcoin? I need to throw all my money in now. And then what happened? So you don't want to do that. And then also, why I enjoy margin trading is because I can trade the price going up or down. So it really doesn't matter what the price is. A 10% move at 7,000 is no different than a 10% move at 20,000. All right, I can make the same amount of money in 50K on a 10% move as I will down here. The only difference is that if I think eventually we're going to 100K, yeah, I want to stack up at this level. I want to accumulate as much Bitcoin as possible at this level so that when we do take off, I can sell my spot for a profit, all right? But when it comes to actually like trading on margin, I don't care what price it is. I mean, I don't want to say it, but if we're at $1,000, I can still make the same amount of money on that specific trade. Now, if I left Bitcoin in a HODL account and we went all the way down to 1,000, yeah, I probably lost a lot of USD value on that. So that's why we don't want that to happen. And maybe I would get rid of my Bitcoin if I saw us going to 1,000. But it doesn't matter. You know what I mean? And I think people who are watching this channel are traders. I mean, I know before I was an actual trader, I wasn't watching technical analysis, on YouTube. I was watching top 5 altcoin predictions. I was watching, the news. I thought there was fundamentals involved. And, sometimes there are fundamentals, but really often, mostly there's not. And that's why technical analysis is important, So, yeah, that's that. I don't really have much more to add to this. I've talked long enough. I hope y'all have been enjoying the channel so far. I got my Bitcoin shirt on. I'm having fun uploading these videos, and I hope that we can all gain something from these. Again, please hit the like, tick the bell, comment, subscribe, all that good stuff. I appreciate it, guys. And then I'll see you next time.